Hello there, you're watching IG broadcasting from the heart of London. Today we're looking ahead to next week, which features the ECB interest rate decision and the OPEC meeting, as well as key earnings from the motor industry. Now, Monday is a bank holiday here in the UK and the US, and the markets will be closed. But let's see what's happening in Europe and Asia on Monday, May the 30th. So here we go, just there, we've got retail sales coming out, retail data from Japan and Germany, Eurozone business climate stats as well, France's GDP and Germany consumer price index. On Tuesday, Wall Street and London will be back on their desks, and they will be greeted by unemployment stats from Japan, Germany, Italy and the Eurozone. We've also got Canada GDP and US personal spending. On Wednesday, it's Australia GDP, China, Cajun manufacturing, Japan data too, UK housing stats and a whole host of PMIs. Australia retail sales kick off Thursday. We've got the trade balance there, Japan consumer confidence and the all-important ECB interest rate decision, as well as the OPEC meeting as well. So Thursday is a crucial day. On Friday, we kick off in China with the Cajun services PMI stats coming from Japan as well as France, Germany, the UK, the EU and more retail stats too. So I mentioned it just there. We've got to talk about the ECB coming up on Thursday. OK, so we've got Chris Beauchamp right here to discuss this. Chris, are we expecting any moves whatsoever, or is it all about those little clues that we always look for?
Yeah, I think it's the little clues end of the spectrum. There's no big change expected from the ECB, either in terms of rhetoric or policy, really. I think it's more a case of steady as she goes. We've had the sort of big announcement on the change of QE, the addition to QE and the expansion of the programme. And now the ECB has to just say, look, we're prepared to stand behind the Eurozone and do what we can. We've just had that deal from Greece, of course, that agreement to release the next tranche of bailout funds, and the ECB also admitted that it would allow Greek bonds to be accepted as collateral for any fresh loans from the European Central Bank. So that's a big move, and you wouldn't be surprised if Mario Draghi did comment on that as well. In terms of market reaction, it could be fairly limited because there's not much more he can say, really. I think this is one of those meetings where we're not going to get any particularly big decisions. So we always get a bit of volatility around the ECB. And it's particularly in the euro, so keep an eye out for that. But it's not going to be one of those blockbuster meetings.
All right, OK. Let's talk about OPEC then, because obviously we always have this huge anticipation that they're going to do something, and they never do.
Exactly, and that's a bit like the Eurozone crisis from the last few years. You have a big meeting, supposedly you discuss production cuts, and then nothing happens. That's what we had last time, and the market was broadly expecting that to happen, which is why you had a gap down on the Monday morning when the market reopened, and then it continued to rally, certainly in stocks and in oil prices. But the expectation is that we just really see no real change again from this group of oil-producing nations. There's too much disagreement. You've had the Saudis recently saying, well, we'll continue to increase production over the longer term. You've got the Iranians just back in the oil-producing game, who are certainly not going to admit to any cuts so soon. They've just got back in. There's no desire there to cut back on production. And of course, oil is much higher now than it was a few months ago. So if you didn't want to cut production back at $30 a barrel, you're certainly not going to cut production when oil is headed north of $50 a barrel. This week we've had upgrades for price forecasts for oil from Citibank, pushing it towards the $65 a barrel range. Forecasts haven't really got too carried away at the moment. Not everyone is rushing to predict sort of $100, $200 oil by the end of the year, but you get a sense now that everyone's sort of capitulating to this oil rally, and then it could start to move higher over the summer. Usually the summer is a good season for oil demand, so there's another reason to think that this rally that we've seen, which don't forget has carried us so far since that February low, might have a bit more in it just yet.
All right, well, let's talk about corporate stats then, because there's not a great deal going on, but there's still a diary that we're going to go through just now. We're going to start on Monday. As I say, it's a quiet week. We've had very busy weeks there prior to this, but we've got Tata Motors just there. It has been enjoying an impressive rally, but it's come down in recent sessions. A lot of this is to do with Brexit fears as well. We know that the company, its revenues, 90% come from Jaguar Land Rover, and they report in sterling. All right, we've also got Volkswagen as well. Now, this company has recently put $300 million into the Israeli taxi startup Get, and it was on the same day that Toyota announced an undisclosed investment in US app Uber as well. So it seems to be moving to that. Gazprom Neft, I know this company very well indeed. I've spent many days of my life outside that head office in -30 in Moscow. Not pleasant. Okay, Wednesday is actually the busiest day of the week. We've got Halfords there, we've got Telford Homes, Wolseley and Ahold. Thursday will finish off the corporate week just there. We've got Johnson's Matthey and RPC Group. All right, now the one that sticks out has got to be Volkswagen because it's been in the headlines a lot, hasn't it, recently? Are we expecting anything exciting from this one?
Well, we'd like to see what the sales numbers are on VW cars at the moment across the globe because in America they took quite a big hit, I think, from that emission scandal. Not so much in Europe, really. Most people sort of said, well, it's not in the world if my car's slightly more polluting, I think. But in America you certainly saw quite a big hit to sales. So if Volkswagen can forecast a recovery there, that will be very interesting to note, and it should bode well for other auto producers in Germany. Now, it's not going to have too much impact on the UK, and as we saw there's almost nothing going on next week. The one thing, I suppose, from the UK market is Wolseley. This morning they announced that their new CFO is supposed to be joining them. Is not joining them, but that is the only piece of interesting news today. Wolseley's numbers could be a sort of interesting one as well because you've got sort of that impact on the housing market, and we've seen improvement there over the last few months. The recent run of updates from the home builders has been good, so again we'll keep an eye out to see whether there's a read across into that sector as well. But overall in the market, it's not the busiest week in the world. Much of it, of course, will be dependent on what Janet Yellen says this evening with her speech, if she says anything at all. But certainly the fact that you've got a little while to go until that big Fed meeting in June means that really it's not going to be the most exciting week in the world. That said, the old cliche is never short a dull market. So we should be very cautious, certainly the first couple of days as well, because you've got 2 bank holidays in the UK and the US. And that means that Tuesday's trading could take some time really to get into action.
Yeah, be in catch-up mode, won't it? And obviously Thursday, that's the day that we're watching, ECB and the OPEC as well. And, you know, as you say, you never really know what's going to happen. All right, that is it. Yeah, relatively quiet week, but here in the UK, it's a 4-day week. So thank you very much indeed for watching. I hope that's helped you out there, giving you a little bit of information to kickstart your week, and have a fantastic weekend in the meantime. Goodbye.